Good afternoon. Happy Friday. This is Sean LaBelle of the Decker Hewitt Group. Welcome back to the Market Watch Weekly Commentary. Apologies for the 2-week absence. The market certainly didn't behave while I was gone, so it did me zero favors. But we are seeing a very welcome relief rally so far in the market this week. So much so actually that the most North American indices are actually trading higher now in the month of March. The TSX in Canada is actually trading at an all-time high here today. This is obviously due to the fact that we are generally a mining, financial, and energy-heavy index. Those three sectors make up more than 60% of the constituents in the Toronto Stock Exchange. Those three sectors are obviously doing quite well so far in 2022. Our own income growth portfolio is also trading at an all-time high here this morning. We have, as I've been talking in recent months, definitely tilted to some of those sort of value-oriented sectors. Those are continuing to do quite well. We expect it to kind of continue in the duration of this year, perhaps just a little bit less so. We've definitely seen some very quick gains in those names, but we do remain constructive on those. In terms of this week's Market Watch Weekly, it's not so much a reading heavy comment this week. There's a lot of tables and charts in there that we found quite interesting in that 2-week absence that we definitely want to share with you guys. We've been telling you guys that we are constructive on this market for this year, and the data would suggest that, and you're going to see that in this week's Market Watch Weekly. Discusses the 25 basis point rate hike that we did see on Wednesday out of the U.S. Federal Reserve. That is, of course, the first rate hike that we've seen since 2018 in Q4. It is also going to be the first rate hike of this new cycle. So historically, markets do quite well after that first rate hike. Generally, the U.S. Fed will not hike rates into a contractionary environment, and we are certainly not in that right now, which is why they're, of course, hiking their interest rates. There's also a really interesting table in there that just looks at those 10% corrections, which we, of course, did see out of the S&P 500. It did hit around negative 11.5% in 2022. The NASDAQ was much, much worse at negative around 21%. So we just believe this to be the garden variety pullback. Obviously, it's quite painful, but we do see these sort of pullbacks in any given year. Investors just got a little bit too comfortable with sort of a tranquil trading environment the last 2-3 years, obviously excluding COVID. So this sort of 10% pullback that we did see, we don't believe it to be in a recessionary environment. So there's a really good chart in there that just illustrates performance after you get those 10% pullbacks. So we encourage you guys to take a look. Hope you enjoy the weekend. We're back at it again every Friday, so stay tuned. Hope everyone enjoys the weekend. Talk to you next week. Cheers.